Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 12th, 2022. It's 10:05 Eastern Time as I'm starting the video, so we're about half hour into the trading session. And this will just kind of be an eclectic mix of a few different trade ideas, some things to look at. And what I'm going to do is start out. I usually don't really focus too much on short-term charts. That's active trading stuff. I know some of you might do it. Most are probably traditional swing or trend traders. But I'll just follow up because this may be actionable. Yes, because in yesterday's video I did talk about reversing, covering shorts, going long, because we had a little divergent low here on the 5-minute chart, and this is NQ again, 5-minute, very short term, active traders. The realm of the active trader, and you can see these divergent lows and divergent highs, and they're usually good for just short-term trades. And so at this point in time, back short again because we have this nice little 5-minute divergent high. In other words, that divergent low, it was a small little bullish falling wedge. It ran its course, or I believe it's run its course, I should say, or at least that's all I was looking for, just a bounce trade. And it was, so let's see, what is that? About 1.4%. And again, active traders tend to use leverage in futures and things like that, so you get 1%. You're talking a few $1,000s per contract of NQ, or you trade the MNQs if that's too big for you, or don't trade at all if it's not your thing. I would suggest trying to cut your teeth trend and swing trading first, but I just want to throw that out there in the beginning of the video, because what you're looking for now is, divergence, I always say, is not a sell signal, although I look for rallies back into resistance when I'm expecting more downside. And then, but you will have, or I'll have, an additional next sell signal where I'll add to a short position when this trend line breaks right here. You have a little minor uptrend line right there. You can see it just comes off yesterday. And that's it. Oh, and we rallied, of course, into resistance. So that was the thing, divergent high into resistance. So, objective short there, or close out longs if you took them. And then come down here. Next sell signal will be on a break of 13,314 is where that level is right there. You can see. And then you can see the additional potential targets. All right, let's go back to let's jump all the way out to longer term charts. And since I do almost the same charts every day, usually the small caps and QQQ, let's look at the stock market as a whole. I don't use the Dow. The Dow is an antiquated index. It's old 30 stocks. It's not representative of the economy or the stock market. NASDAQ 100, it's my preferred trading proxy, but nor is that representative of the U.S. economy. It doesn't have any financial stocks in there. They're a big component of a very big component of the U.S. economy. It's mainly a very tech-heavy index, but it's good for trading. It's a high beta index, trades well to the technicals, a lot of liquidity in the Qs and NQs. And but if you want to know where the stock market's going, this is your guy right here. This is the Wilshire 5000, widely considered the single best proxy of the stock market, even better than the S&P 500. S&P 500, yeah, it's 500 companies, but they're all large cap companies, very mega cap companies, and they're the 500 largest in the U.S., and this one has 5,000. It has large caps, mid caps, small caps, even micro caps, and 5,000 companies. So it is a much more accurate measure of how the entire stock market's doing. And you can see on this is a daily chart here. This is a significant resistance level. It was major resistance right here, 2 big reaction highs followed by a big green impulsive breakout candle and a back test. So that right there, all that set that as a very significant level. After the initial leg down, we hit it to the button. That's a further additional validation. So this is how I analyze charts. So the more check marks, the more reactions I see off a level, the more valid it is, because it shows that traders have stepped in there and bought at that level, or sold rallies back to it. And it's also, if you want to look at it from a more simplistic view, the more obvious a support or resistance level is, a trend line, the more people are going to see it, the more folks out there trading, and so the more reactions you have. And I look at both the bodies and the shadows, the skinny part and the fat part. And so here's a couple bodies there, a couple bodies there, kind of went through it. You know, traders knew it was a level. Volatility had increased, so you start to move through, but you can see you traded around it, and once it was clearly taken out, boom, the next leg down started. So this is the first back test, first rally back to that level. There's that big 200-day exponential moving average, the red line right there, right? So you're at price resistance, a key moving average, and click this line here, and now what you have are Fibonacci retracement levels. So this blue line here marks the all-time high, the Wilshire 5000, down to, I need to tighten that line up just a slight hair to get that low. There it is. And so that's it. So it's the entire move down from the highs last year, last November, when the NASDAQ 100 and small caps, everything else peaked, all the way down to the lows, and a perfect 50% Fibonacci retracement. So there's price resistance, moving average resistance, and Fibonacci resistance all there. And we could also just take a trend line here, come off the high right there, hit that next candle, and see that we're getting close. And there's that other, that's the top, you know, same on the Qs. My bounce target range is from between the 200s, the 200 simple, the red line, and the 200 exponential, and then you have this downtrend line that comes in as well. So you have a confluence of resistance. And again, it's the same thing I've been saying. And I'm not looking for a hard top here. More of a process probably in this one. Probably grind around for a while. I told you I'll be in town next week through Thursday, leaving Friday for a little mini vacation, and I'm also going to be not doing a whole lot of trading between now and then. So I'm still doing these videos. I'm going to share some new trade ideas today for you. But what I want to show you there from yesterday's high, the upside to that next 200-day moving average is only about 2%. So again, yeah, this is to me an objective scale-in zone, and you know, you're going to have to be patient with this one. A lot of times, you know, this was a hard pivot. As posted back then, you know, and this was more of a soft pivot. I told you I started taking profits on shorts, I'm sorry, on longs, swing longs, trend longs from that, and then started at the higher point more recently, closed out the last of those longs just last week, and actually then started scaling into shorts. But again, it'll be a scale in for those longer term accounts, active trading account. Don't try to follow me there, because I'm long 1 minute, short the next. That's the active trading account. These are the swing and trend accounts here. So that's it. And it could, like I said, it could be a process that takes a while. What I think will happen, again, I've shared this so many times, but I'm going to show you one more time. And this is just, you know, it's what I call microanalysis, or pretty fine-tuned prediction, but looking at something like this 60-minute chart of QQQ, we fail here on or around this level right now, and come on down here, zigzag our way down to this primary uptrend line, hit that in the coming weeks, and then get that maybe one more last thrust up. Maybe, maybe not. And if we get down there, we'll see. I'll try to determine whether this was the top, because again, we hit the minimum, the bottom part of my max target range, and that may cap the rally if I'm correct, obviously. If I'm not correct, it's not gonna. And or we can go one last thrust up to the top. You know, there were some and I talked about it back here, so many beautiful bullish charts. I've never seen so many divergent lows on the very significant daily time frame in so many sectors, so many key stocks. But again, how much of that was priced into this 20+% rally so far? So, and in a bear market as well. In a bull market, you get divergent lows on the daily charts, on the indexes like we've had, and many key sectors. That is always your catalyst to new highs and beyond. So the million-dollar question is the bear market over? Was it over here? And are we going on to new highs, or is this just a bear market rally? I still maintain, you know, they say biases are bad in trading, confirmation bias. I know it is. It can kill a trader or an investor. However, I'm also on the side that you need to have some type of biases to formulate your overall plan. Because it's important. Do you think you're in a bear market? And if so, you want to look for rallies, even if the charts are constructive. You want to look for rallies back into resistance to get short. Whereas in a bull market, you may not want to short. You may just want to wait for a little consolidation and then a breakout above the next level. Okay. Okay, no particular order. I'm just going to rifle over through some trade ideas for you real quick. I mentioned yesterday ZB having this divergent low right here, and a decent chance we can get a little kickback rally, maybe as high. Max target would be a back test of the trend line right there. But you can also see some resistance levels before that. But based on the scope of those divergences, I think we could carry up here to minimum that 141. And the thing is, maybe not. Divergences don't always play out. So boom, you just set a stop above the recent low. There was support right there. We came off, and so you have a stop under yesterday's lows. You let it ride. And ultimately, I think, if we get that, it's probably going to be some more downside after that. We are in a near-term downtrend. You have to recognize that as well. So just one of many trade ideas. Take it, don't take it. Another one is Peloton, PTON. This one, had the snot knocked out of it. All the COVID trades did. This was one of the big COVID stay-at-home trades. Everybody wanted to buy exercise equipment and work out because they figured they're going to be working at home forever, and that didn't prove to be the case. So, everyone bought Peloton bikes, and then COVID ended, and people started going back to the gym. His stock is cheap. They make a heck of a bike. I know they had problems with their treadmill, but again, and they have that whole app subscription-based thing. Okay, forget about fundamentals. You can look up the fundamentals. I haven't. I'm just looking at the chart here. All I can see is a nice, beautiful, big divergence, big wedge forming there with positive divergence, a breakout, a near back test, and it's been walking higher. I don't even have targets for you. This is if you are longer term bullish. It's just a stock that looks pretty good here. It's at resistance now. I'm going to give you a little level right there. You have that reaction low. Needs to pop pretty much about 1240, 1245. And then there's not a super strong level here. What you might want to do is just trail up a stop. I mean, this wedge could project it all the way back up here to this other reaction low. These are old levels I had. Remember, we were shorting this one back here. Now I'm more interested in buying it. And again, even if you are bearish on the market, I like to hedge my bets. Go long the most bullish stocks. We're certainly not on any hard sell signals now. And that one could zigzag up. So there's your target, 16, 18, 19, 80. And let's just focus on those two for now. IYR, I think the REITs pretty much are an objective short right now. This is IYR, the Dow Jones iShares US Real Estate Index Fund, REIT ETF. And you can see right here we had this, I guess I revised the final target to right there. We had a divergent low, we rallied. Here's a point, big resistance right here, 101.50. And so you take a shot at that, and next resistance overhead. These are old levels, old targets, but they still are resistance levels, 105.36. You look at the 60-minute chart here, you can see nice little negative divergence forming. There's an uptrend line. And so here, this would be your targets, and these would also be your objective entries. You could take a pot shot at it here. It's not so much a pot shot. You're at big resistance on the daily. Again, it's not showing through here. Then break below 136, but then you have this BOD, I call it benefit of the doubt trend line because it's support just below that. But you could add, maybe a third here, a third on that, or wait for that trend line to go, and then your first target's 97 and then 95, and then potentially that's just quick pullback targets. But if we can get some traction going on a correction here, a move down in the markets and particularly the REITs, then 90.57, and who knows, maybe all the way down. Remember, longer term charts are still quite bearish. Put in these big divergent highs. We are in a downtrend. We are in a bear market in just about every sector and index. Make no mistake about it. And if you're an Elliott waver, well, you're looking at a 5 wave. There's wave 1, 2, 3. 3 is always the largest, most impulsive. 4 up, and then you'd have primary wave 5 down. Wherever that's going to go, I don't know. So that's what the weekly chart looks like. And there's that resistance as well that it's at. And then your ETFs, if you don't want to short, you can just buy SRS. It's a two-time bearish REIT. And then there's, I don't know if they're still around. I haven't used these in a while. DRN, yeah, there it is. DRN's the bullish ones, and DRV if memory serves me correct, was the bearish REIT. So 3-time leverage there on DRV. If we grind around for a while in the market, SRS is going to have less decay because it's only 2-time leveraged, so that might be your vehicle to go with there. I'm not sure if there's a one-time non-leveraged short ETF or not for the REITs. VRTX. This is just out of the biotech sector. I've been looking at the biotechs. Biotechs were just so bullish recently, like so many sectors. I'm just going back to a biotech ETF. XBI, one of the big ones. You had positive divergences down here at that low, and it's been a heck of a run, but right into resistance so far. It's about a 50% rally in the biotechs there. PBE is another one. That one's actually at a downtrend line right there, downtrend line resistance. And, I often say birds of a feather flock together, but that doesn't hold true in every sector. It does in let's say the gold mining stocks. They all tend to move in synchronicity, in sync. Then you have biotechs, but you have such a diversity among different biotechs, different drugs targeting different disease states. Some are pure play biotech, some are integrated biotech, big pharma, and then some have multiple drugs in their pipeline spread out, and others have everything riding on one big potential blockbuster drug. So what I'm trying to get at, the charts are often different. I'm not screamingly bearish on the sector right now. I think to probably get a nice pullback trade on it. Where would I target on PBE if you did that one right there? A minimum target, 64.28, but we've already kind of come halfway down there. Let me just show you a potential trend trade here. I didn't go through all the components, just the top handful, the largest components of XBI and PBE. This is VRTX, Vertex Pharmaceuticals. And so what you're looking at here, it's kind of a wash, rinse, repeat situation. This is the all-time high, a major high. Those are always big resistance levels. Traders are going to look at that. And if you fail, you have a double top there. This one tends to set up, you get these divergences, negative divergence, just like you have now. Then what you do is you get a series of trend lines. These were old trend lines I had marked up from before on this one. Boom. Broke that one, then you pushed up, made a marginal new, and still extended the divergences. Then the secondary trend line broke, started moving lower, and then the third or tertiary trend line broke, and then that's all she wrote, and gap down. But then it's set up in this nice, beautiful, big bullish falling wedge, just like the biotech sector had. Just again, one of many that had very constructive charts. But this one this did its own thing. This one bottomed back in October 2021, and it's been strong throughout. And so just like back then, it's almost a mirror image. You have little minor trend line 1 right there. I didn't draw it exactly. You can see it highlighted in I have the color turned down on it, but there's a minor trend line followed by a break in the first correction, secondary trend line, and now the third. And so if you take away everything else, let me just redraw this for you. This is just a big old giant bearish rising wedge pattern, complete as you had back here with negative divergence. Back then, the stock fell about 42%, over 40%. And so you take a shot. Number one, you can take a shot at or very near. We're still very near that big 304-ish resistance right there, and maybe a minimum target right now, pull back to the wedge and that 273 support. It's going to give you, if hit, that's about a 7-8% drop. Not bad for a swing trade. Next target, 254.80, and then 243 with the next objective short entry to come on a break of the trend line and or that 273 support. I have a little note to see weekly. By the way, they report November 3rd. This would be also a swing or trend target. Stock is in a bull market. This biotech company is clearly in a bull market, bull trend. Again, Wall Street will tell you anything a 20% move is a bear market. These are big drops. They measure well over 20% each one. These are 40-50% corrections, but they're just corrections in ongoing bull markets. So again, I always say don't get tied up with the whole 20% bull bear market thing. Every stock, the moves, the corrections are commensurate with the the rallies. You have big 300-400% rallies in this thing, 200-300-400% each of these rallies. And so what I'm getting at here is that's a natural target. When you have a primary bull market uptrend line, every now and then you come back to check it. It's just a reversion to the mean. And now what happens is you can see the momentum, the vigor of these rallies is diminishing. That one was much stronger. Then you had this one. You get increasingly weaker rallies, and you start to come more frequent. Nothing goes up forever. There's no single chart, no single stock index. It just has gone up without ever taking out its major trend line. So sooner or later, this one takes it out, and now it has the potential to put in a double top. So if you get rejected here, it's going to be a change of character. Usually this thing only touched that trend line every few years. And so we could get to that and break it out. I still break down below and then head all the way down here to 142. So there's the potential for that. Again, you'd probably very likely have at least a minor reaction on the initial tag of that, but that's also a downside target, which is about 29%. That's what I just measured from where we're at. All right, just one of many, and and it's not excuse me, it's not one of my favorites, only because I can't make a screaming argument to short the biotechs as a whole. If the sector was set up much more bearish right now, then I'd have a higher degree of confidence. But again, it's all about spreading your eggs out and not putting them in one basket. And this is just one of several trade ideas. And if you're going to want to start shorting the biotechs, I think you're better off shorting the stocks with the most bearish charts, and instead of going with a sector ETF, because some of the charts are looking kind of constructive. There's Gilead coming off a divergent low. Biogen, look at Biogen coming off a nice divergent low, well off its highs. So here's a stock I'd rather, if I had to be one or the other, I'd rather be long this one. So that's why, and when you go with XBI or any of the biotech ETFs, remember, it's just like buying the S&P 500, trading SPY. You buy SPY, whether you go long or short, you're at the same exact moment you're going long or short the most bullish companies in the stock market or in the S&P 500, as well as the most bearish. And so when you buy a sector ETF, if they tend to move together like GDX, the gold mining stocks, fine. ETF works great. But when you have a sector that just has just a whole mixed bag of charts, some bullish, some bearish, and again, different product lines and different disease states that they're treating, and different some of these stocks have drugs in clinical trials, some have drugs that are already bringing in money. And all right, enough on that. Let me move on. Let's talk on the final thing here. We'll talk on gold, silver, and the euro. So I'm just going to start with the euro. I've covered gold quite a bit recently. I remain longer term bullish on that. I had to pull back trade the other day. I told you, just took profits, but now it's I already got back into that. I'll show you that chart in a second. But let's talk on this one first. This is where the potential is right now. This is, to me, a huge chart. So this is the euro US dollar pair, and this is the major, covered this many times, a major long-term support zone. We hit it there, there, there. These are big moves in the currencies. And remember, gold and the euro move positively correlated. They go up and down together because the dollar and gold are inversely correlated. And the whole reason I look at euro US dollar, because the euro is the biggest component of the dollar index by far, 57.6 or 8%. It's basically an inverse of the dollar index. And you can see we hit it there as well, the top of the zone. We hit the bottom of the zone right there, and then we had this breakdown. Told you at the time, I suspect that breakdown is going to prove to be a fake down, aka bear trap. Now, it hasn't happened yet, but look, we're coming up to back test from below. So if you are a euro bear, you short the euro right now. You short it on the back test of the range from below, or maybe the top of the range. But if it recovers that and gets back above that range, that is going to be a very, very powerful thing. That would be a bear trap, a false breakdown. So all these euro bears, dollar bulls that are short the euro along the dollar right now will be for, they'll start to cover. They'll start to see their positions go underwater, number one. And then from a technical perspective, the euro has no business recovering that. It took out a major support zone. Support once broken becomes resistance. So let me just add that here for you. Resistance. Okay, so now it's resistance because we're testing it from below. So watch for that. And then when you go down to the daily chart, you can see there's a little minor trend line and nice price resistance at 103.648. Boom, pop that, and that's going to be a breakout right there. It's going to be pretty powerful. There's your downtrend line. There's your price resistance, several reaction lows. Once you book it, there was that breakdown right there. Major support, but they've already recovered all the break. Basically, it's a back test. Let's not read any more into it. Let's not over analyze it. Let's see what happens. We take it out. You can see where I think we're going. These are all resistance levels, potential targets. But again, if you take that out, it's going to be very powerful, and it's going to have longer term bullish implications. 60-minute chart. This is the chart I've showed you recently since back here when we broke down. I gave you price targets, expecting this scenario. There was a divergent low. T1 right here was this resistance zone that was hit right there, first target hit. And we went on, consolidated in this range for a while. I have to extend this box here. Hold on. Okay, there it is. So, and I updated this recently. I said we're in here playing a game of ping pong, and we'd break out, and the next breakout would likely determine the next major trend. And I told you I expected the breakout to be the upside, and the breakout was to the upside, and that gave us a quick thrust up to hit the second target. Again, that was laid out all the way back here. And so this one's playing out. Now we are back testing that range from above. Top of the range was resistance. Resistance once broken becomes support. So no guarantees, but this is where the buyer should step in and then take us up to potential T3. Again, I'm going to leave it potential because right now this right here, this T2 being hit was a back test of that long-term support. We're on a 60-minute time frame, and so it may not look like major resistance here, but it is, as I just showed you on the weekly. So now we need to take that out. Otherwise, it's just going to be a back test and a rejection, and maybe the euro continues lower, the dollar continues higher. It's not my preferred scenario, and I can tell you if you trade the euro, gold, silver, remember gold and silver and and the dollar are very highly correlated, and so this is a reason to be long gold, long silver right now. And as promised, I'll wrap it up on those two, and then we'll wrap the video up here. Let's see here. GC, there we go. Gold. Okay, so recently I told you this was a initial swing target from back here off that divergent low. We stair-stepped higher, hit that. Said I'd reversed it to a short for a quick pullback trade because we also had negative divergence at this little wedge right here. And then you took out the trend line, and then look what we hit. We hit that. I had this support zone, 3 support levels in close proximity. We pretty much hit the bottom of it with a spike down this morning, and then boom, buyer stepped in hard. You look at a 1-day chart, a 1-minute chart, and there it is. So look at this reversal off that level, about a 1% move. Remember, gold doesn't move as much as silver. That's a pretty healthy move for 1 day right there. And so there it is. Nope, tried to give you a 3-month. There it is, bigger picture there. So now we need to take out this level, and here's the funny thing, and again, this stuff just, I don't know, I'm a chart geek, never fails to amaze me. So this has been a pretty big level for gold, right? That's what was the initial swing target. Well, that's same, it coincides perfectly with that resistance on the euro, right? There was major support on the euro. Gold did the same thing. This, again, mirrors each other. Do it on your own charts. Overlay the euro and gold. You'll see that they move in almost lockstep. And so that, if the euro breaks out above that T2 level and the major resistance I showed you on the weekly chart, which are one and the same, then gold will ultimately follow, whether it breaks out concurrently or shortly afterwards. So that's it. There it is, 1825, and then those levels I gave you on the euro. Look for a breakout. Obviously, the more solid the breakout, the better. It's all the better if it can close solidly on a daily closing basis. Even better if you can get it on a weekly, solid weekly closing basis. If that's the case, you do not want to be short gold. You want to be long gold and silver, and or the euro if your guys are any guys or gals are forex traders. Um, and then silver. Silver is going to follow. It's big brother gold. So it's silver. This is just a 10-minute chart. This is what I trade actively. I told you I like these shorter term charts. You had this little wedge here right there recently, and we popped this morning, and you also had a nice resistance level. So these are my favorite setups when you have not one but dual intersecting resistance levels like that, and you popped it, and that should carry silver at least in the near term up here to 2059. Any back tests of that level should be my arrow tool. Any back tests of that level would prove to be an objective entry, as would a back test of the trend line, and even there's a little support right here. So obviously I want to see those levels hold. It's not the end of the world, but it would be ideal. Like I said, this is just a very short-term chart. Let's go to the hourly chart where most swing traders are trading. That's it. So silver took out this downtrend line recently. That is not my line tool. This is my line tool. There it is. We had a divergent low, breakout, a little divergent high that caused this correction. But again, in a bull trend, these divergences they play out for relatively minor corrections. And so if you can get a little more downside, great. But you may not get it. If you do 2010 or so, 2011 would be an objective entry or a back test of the trend line, and then the next target on silver futures is right there about 2156. Kind of it's a not a hard level, but rough target, and then after that 2260. Alrighty, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.